We'll be going over IRS Form 3922, transfer of stock acquired through an employee stock purchase plan under Section 423C of the Internal Revenue Code. So there are a couple of nuances that you might want to know about this. First, it's a little bit different from IRS Form 3921, which is the transfer of stock through an incentive stock option plan. This is specifically under an employee stock purchase plan where you might have access to purchase company stock at a discounted price. So we'll walk through this form, kind of outline some of the differences between this and IRS Form 3921. And then we'll talk about some of the conditions in which you may need to report this for income tax purposes. So just like IRS Form 3921, you may receive this the year after you exercise an option. And the IRS requires companies to give copies of this, employee copies of this form to employees or former employees no later than January 31st of the year following that purchase. So let's go ahead and take a look at the left-hand side of the form. In this case, we've got Acme Corporation and their address, their tax ID number, followed by John Doe, our employee, his social security number, and then the employee's name and account number. What I want to point out is if for some reason this address here is incorrect, then you should contact your company HR department and update your address. You should also notify the Internal Revenue Service simply because you may receive correspondence. There's always a reason that you should keep your address with the IRS up to date. And one of the ways that you can do that is by filing IRS Form 8822, or if you're a corporation company, you can file IRS Form 8822-B. And that is the official notification form that the IRS uses to update your tax records. On the right-hand side of the form, we have some information. We'll go through this, and then we'll talk about how this information might be used on your tax return. So in box 1, we have the date that the option was granted. So in this case, John Doe received the option to be able to purchase this employee stock on March 1st, 2022. He actually didn't purchase that until March 2nd, 2023. So if we're in tax year 2024, this would be like he would have received this by January 31st of 2024. Fair market value per share on the grant date, it's basically whatever you could have purchased that stock on the open stock market. So $20 per share. The fair market value a year later when he actually exercised it is $30 per share. So the exercise price paid per share is $15. And then in box 6, the number of shares transferred was $1,000. So basically what it's saying is he had access to buy $1,000 or 1,000 shares of Acme Corporation stock. He paid $15 a share or $15,000. On the date that he exercised that, they were worth $30,000. So there's a spread of about $15,000. So that's the part that a lot of taxpayers may get tripped up on, how to report this. We'll talk about that in just a moment. Boxes 7 and 8 are the date that the legal title transferred. There's not a whole lot of information in the instructions or in IRS publication 525 about either this or box 8, which may be blank, but it's supposed to be the exercise price per share determined as if the option was exercised on the date shown here. So basically saying, all right, so this could have been the exercise price per share, back on March 1st, 2022. but it could be blank. So let's talk about how you might report this for income tax purposes. So I'm following an example in IRS Publication 525. Pine Company has an employee stock purchase plan. The option price is the lower of the stock price at the time that the option is granted or at the time that the option is exercised. And the value of the stock when the option was granted was $25. So Pine Company deducts $5 from Adrian's pay every week for 48 weeks for a total of $240. The value of the stock when the option is exercised is $20 per share. So as a result, Adrian receives 12 shares at the end of the year. The holding period for all 12 shares begins the day after the option is exercised. So in this case, if you apply that example here, the holding period would start on March 3rd, 2023. And that's important because you may be using that date to calculate whether or not your capital gains on the sale of stock is long-term or short-term. So again, refresher, long-term capital gains treatment means that your holding period is 1 year plus 1 day. So if the holding period starts on March 3rd, 2023, that means he needs to, in this case, John Doe would need to hold this stock until April 3rd, 2024 to qualify for long-term capital gains treatment. So just like Adrian's basis in each share would be $20, John Doe's basis would be the amount that he actually paid, or $15. So under an employee stock purchase program, employers may allow an option for employees to purchase stock at less than fair market value, but not less than a 15 or not more than a 15% discount. So if you work for Home Depot, you may be able to participate in a stock purchase program, and it may allow you a discount on the employee stock, but that discount cannot be more than 15%. So if you're in this situation, then if the option price at the time that the option was granted was less than 100%, but at least 85% of the fair market value, and you dispose the share after meeting the holding period requirement, or if you die while you own the shares of stock, then you must include in your income as compensation, so subject to ordinary income tax rates, the smaller of either the excess of the fair market value of the share at the time that it was granted, or the excess of the fair market value of the share at the time of disposition or death. Basically, any excess gain is capital gain. If you have a loss from the sale, then it's a capital loss and you don't have any ordinary income. So another example from the publication, let's imagine that an Acme Corporation grants you an option to buy under a stock purchase plan. And let's just say that the option is $20 per share for 100 shares. And during the time that the option is granted, the fair market value is $22. And then let's just say that 18 months later, so you actually exercise the stock and the market value is $23 per share. So right there you have a spread of $3 per share for 100 shares. let me recap on this. Fair market value when it was granted was $22 per share. When it was exercised, it was $23 per share, but you paid $200 per share. So, and then a year plus after that, you sell your stock for $30 a share. So in the year of the sale, you would report the difference between the option price, which is $20, and the value at the time that it was granted of $22. This would be considered wage income or ordinary income. So that $2 times 100 shares, $200 would be reported as wages. So now if you bought stock at $20 a share for 100 shares, that basically means you would pay $2,000 for that. If you turn around and sell it for $3,000, you've got $1,000 of a gain. So that gain, you take out the $200, that's considered wages. Then the other $800 would be a capital gain. And if you held it for more than a year and a day, then it would be considered long-term capital gains. If you held it for less than that, then it would be considered short-term capital gains. So that's about all we have for this video. Basically, we break down a little bit more about these nuances and how this might be reported in our article. So feel free to check it out at teachmepersonalfinance.com. Type in IRS form 3922 in the search bar, and you'll see the article up here. We'll also put links in the show notes to other forms of resources that we've created for other forms and schedules, specifically, how you would report capital gains on either IRS Form 8949 or Schedule D of your tax return. And so if you like our articles, subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions or comments, or if there's another topic you'd like to see discussed in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.